All right. We look at corporate governance. We look at corporate governance. In the syllabus, you may not find such a topic. You may not find such a topic. But looking at how corporates are governed, it involves putting in place some committees, which will include risk management committee, procurement committee, recruitment committee, audit committee, and internal audit. Because we know that internal audit is part of management, because they assist management in designing, implementation, and review of internal control system. So we want to discuss corporate governance by use of audit committee and internal audit. So we'll be discussing two subtopics together and corporate governance. Plus, of course, we know that this discusses the best practices. Corporate governance purely discusses best practices. When we're discussing the 6 evolutions of audit, audit has evolved over time, where we say that in early audit, we were reporting on truth and correctness. In contemporary audit, we are reporting on truth and fairness. In early audit, it was about vouching audit. Contemporary audit is risk-based audit approach. Contemporary audit, we were only reporting to the owners. Contemporary audit, we have extended liability even to third parties. We even talk of in early audit, audit was manual, but in contemporary audit, we have computerized their audit exercise. We use cards because clients have also computerized their accounting systems. And in early audit, aspects of stewardship concept and corporate governance were not there. Whereas in contemporary audit, they are very much present. Those are some of the changes that have happened in audit. So corporate governance is seen a very new concept. It is a new concept which discusses best practices. It discusses best practices. Now, entities which do not observe the best practices, and the auditor modifies their report as a result. Of course, we know the repercussions, that this will give a negative image to the general public, that there could be issues of fraudulent activities, embezzlement of funds, malpractices, departure from the norm, and so on. So, and especially entities which are looking forward to be listed in stock exchange. Yes, those who are already listed, or those entities looking forward to be listed in stock exchange, are required to embrace corporate governance, are required to ensure that they have compliance, or they are compliant to corporate governance aspects which relates to best practices. It is after that, after a paragraph or two, we'll introduce the element of audit committee. We will introduce the element of audit committee. It's like a small subtopic, but it's examined, or else CASNEM has got very big appetite on this. They like testing it so very much. They would even sometimes tell us that we have a new company, it wishes to have audit committee, highlight the benefits that may accrue, or the importance of such a committee in an organization, just like that. So audit committee comprises of NEDs. NEDs are non-executive directors. We used to lecture this in SGE, Strategy, Governance, and Ethics, before they revised this syllabus to what we are discussing now as leadership and management. So strategic governance, the element of governance, we are really discussing lots of corporate governance, which included the non-executive directors. Of course, we have the executive directors who are involved in daily operations of an entity, actively involved in day-to-day activities of an entity, unlike non-executive directors who are not actively involved in day-to-day operations of an entity. They are engaged on a need basis. They are engaged on a need basis. It is highly recommended that non-executive directors be equal, just like their executive directors' counterparts. So that when it comes to voting, remember we are putting them there to look in the interests of the shareholders and other stakeholders. And we face problems when you talk of agency theory and stewardship concept, which is the role played by the executive directors. Executive directors are agents on behalf of shareholders. Executive directors play the stewardship role. They are stewards of shareholders' resources. But you'll find that a conflict arises where the executive directors start pursuing their personal interests at the detriment of the shareholders' interests. You'll find them trying to increase their salaries, increasing their allowances, or else they are engaged to maximize wealth to benefit themselves, shareholders, and other stakeholders. But you may find them pursuing their personal interest at the detriment of any other person's interest. So as such, non-executive directors are put in place to look at the interest of the shareholders and other stakeholders. That's what we are saying. At least they should be equal, so that when it comes to voting, there is fairness, equal numbers of watchdogs, equal numbers of equals to the numbers of the executive director. So out of these non-executive directors is where we get the audit committee. Out of the non-executive directors, this is where we get members of the audit committee, who should be minimum of three, and at least they should be odd numbers. They should be odd numbers. Remember, even when we are discussing arbitration, we said arbiters should be odd numbers. If it happens that we appoint two arbiters, then you may be required to appoint a third one, who is known as an umpire. Yes, so that when it comes to voting, at least we can say majority have their way, minority have their say, then we can go the majority way. So they need to be at least odd number. Plus we say they need at least to possess accounting knowledge, the economics knowledge, financial knowledge, taxation knowledge, because amongst the roles they play, number one is to offer expertise. Ni kama ile wewe unasoma kwa leadership and management, kwa inaitwa line and staff structure. How does it look like? It looks like this. We have the CEO, we have the managing director, we have the general manager, then we have the functional levels. We have the HR department, the finance department, the production department, we have sales and marketing department, then we have experts here. Yeah, we have experts here, then experts are all over. Yeah, so these are the ones we refer to as line, and these are the staff. The CEO, the president. Staff includes Akina Mr. D, includes Akina Monica Juma, and now this latest guy will teach. Those are staff. They offer expertise to the CEO. These are the ones we know, but they always engage experts to play a role of offering advice in technical areas. That's audit committee. Theirs is to offer expertise. And you can recall the rule of Nemodat quod non habet, that you can't give what you don't have. So they must possess this expertise for them to be able to offer such expertise. Plus again, internal auditors, as we'll be discussing later, under ISA number 610, they have one of limitations that they are not able to be independent. Yet ISA 610 and IIA, Institute of Internal Auditors, define internal auditors as an independent appraisal function. So they are required to be independent. But since they are engaged by the management, it's management who influences on their scope of work, and they report to the very same management, then achieving independence becomes impossible. But when we have audit committee, yes, let's say we have audit committee here, we have our management there, we have the internal auditors here. So the audit committee acts as an avenue of communication by internal auditor to the management. So this way, we are able to enhance their independence because they are not reporting to the management direct. Plus, the reports of internal auditors are reviewed by audit committee before they reach the management. And so is the element of external auditors. Yes, audit committee will be actively involved in appointment of external auditors, enhancing their professionalism, enhancing their independence, and even communication between external auditor and the management. But it still remains that external auditors report to the shareholders. But in event their communications, we know it's a number 260, management sector, external auditors are reporting to the management. So it's an avenue where both auditors can communicate to the management. It's an avenue which will ensure that recommendations given by both auditors, internal and external, is being implemented by the management as they enhance the independence of internal auditors. So they play a very vital role, because we highlighted under inherent risks that if management dominates, that's inherent risk. If you can call the 8 points we listed under the management characteristics, management dominating, that's inherent risk, which means that the financial statements are highly susceptible to misstatements. But when we have audit committee, we have an internal audit, that's corporate governance. Those are best practices. And we mentioned that the presence of these two, which are well resourced, then as auditors, we should be assessing the control environment. The control environment, hope you can recall the 8 elements of COSO, ERM framework of 2004. One of them was, number 3 was control environment. We assess control environment as being strong when we have audit committee in place, when we have internal audit in place, So basically we are saying that we have audit committee. It comprises of non-executive directors. They should be at least a minimum of 3. They also need to be odd numbers, so that when it comes to voting, we can always know the direction that the decisions are being made. They need to possess accounting, economics, finance, taxation skills, because they are there to offer expertise. And if they do not possess the expertise, then they cannot be able to give what they do not have. They have issues because they are expensive to maintain. I believe in the financial statements, you always see directors' emoluments. It's these guys who are being paid. So it is an additional expense to an organization. Plus also, they're not readily available. We need guys with some speciality, some expertise. So sometimes they are not readily available. Plus, you may find them that they be overburdened with other directorships. I don't know whether you've ever heard a friend telling you, I'm a director in this company, in this other company, in this other company. So sometimes they are overburdened with directorship, making it impossible for them to be available when they are required by different entities. So their input may be required by a certain organization, but they are not readily available for being overburdened by other directorships. This one we liked. It's just a summary. It's not so wide, so I can say corporate governance means the manner in which companies are directed, and controlled. Companies are directed and controlled, and encompasses key aspects, such as the role of board of directors, such as the role of board of directors, the overall controls the overall controls and risk management framework and risk management framework and risk management framework and risk management framework, full stop. Another paragraph. It has become increasingly important. It has become increasingly important. It has become increasingly important to most organizations, has become increasingly important to most organizations, particularly those listed in the stock exchange, particularly those listed in the stock exchange, particularly those listed in the stock exchange, and those looking forward to listing, and those looking forward to listing, and those looking forward to listing, and those looking forward to listing. Companies should comply. Companies should comply. Companies should comply with corporate governance. Companies should comply with corporate governance. Companies should comply with corporate governance to safeguard shareholders. Companies should comply with corporate governance to safeguard shareholders and other stakeholders' interests. To safeguard shareholders and other stakeholders' interests. Safeguard shareholders and other stakeholders' interests as they are more remote, as they are more remote, as they are more remote from the directors. They are more remote from the directors who manage the company. They are more remote from the directors who manage the company on their behalf. More remote from the directors who manage the company on their behalf. More remote from the directors who manage the company on their behalf. I explained sometimes back that remoteness is with regard to geographical dispersion. Shareholders are geographically dispersed. And number two, expertise. Expertise. You may even prepare very good, well-presented financial statements, but some shareholders may not understand what you're presenting. So that's why they have agents who are acting on their behalf because of this remoteness. They may not understand, they may not even interpret the financial statements. Full stop. Another paragraph. Failure of a company to comply. Failure of a company to comply with relevant governance requirements. Failure of a company to comply with relevant governance requirements. Failure of a company to comply with relevant governance requirements would result in qualification. Would result in qualification of auditor's report. Would result in qualification of auditor's report. Would result in qualification of auditor's report, which could damage the company's image. Which could damage the company's image and reputation. Which could damage the company's image and reputation. Which could damage the company's image and reputation. The company's image and reputation. We highlighted several negative implications of a modified opinion. Now have a subtopic, audit committee subtopic. Audit committee. Subtopic, audit committee. Audit committee. Say, this is a subcommittee. This is a subcommittee. This is a subcommittee within the board of directors. A subcommittee within the board of directors. A subcommittee within the board of directors consisting of non-executive directors. Consisting of non-executive directors. Consisting of non-executive directors, into brackets NEDs, into brackets NEDs, non-executive directors, into brackets NEDs, i.e., those not involved into day-to-day learning, those not involved into day-to-day learning of the entity's operations, those not involved into day-to-day learning of the entity's operations, day-to-day learning of the entity's operations, Full stop. An audit committee should have at least 3 NEDs. An audit committee should have at least 3 NEDs. An audit committee should have at least 3 NEDs. That's non-executive directors, who should be independent of other executive directors. Who should be independent of other executive directors. Who should be independent of other executive directors. Independent of other executive directors. Full stop. Another paragraph. Those involved in such a committee, those involved in such a committee, those involved in such a committee should have a good background. Should have a good background in accounting. Should have a good background in accounting, comma, economics, comma, taxation, comma, auditing and finance matters, auditing and finance matters, auditing and finance matters, to be able to carry out, their functions effectively. To be able to carry out their functions effectively. To be able to carry out their functions effectively. Full stop. Another paragraph say, having an audit committee at the board level, having an audit committee at the board level is one of the corporate governance requirements. Having an audit committee at the board level is one of the corporate governance requirements, especially for listed companies. Especially for listed companies. Especially for listed companies. Especially for listed companies, i.e., companies operating in the stock exchange. Companies operating in the stock exchange. Companies operating in the stock exchange. Perfect. Subtopic, duties of the audit committee. 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 Number one, reviewing of the entities. Reviewing of the entities' audited financial statements. Reviewing of the entities' audited financial statements. Reviewing of the entities' audited financial statements before they are approved by the board. 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 Yes, the board will always append their signature. Number two, coordinating all functions. Coordinating all functions of external audit process. Coordinating all functions of external audit process. All functions of external audit process. Of external audit process. Number next. Reviewing of the internal auditor's report. Reviewing of the internal auditor's report. Reviewing of the internal auditor's report and making appropriate recommendations. Reviewing the internal auditor's report and making appropriate recommendations to the directors for action. Making appropriate recommendations to directors for action. Appropriate recommendations to directors for action. Next. Acting as a communication link. Acting as a communication link. Acting as a communication link between the external auditors. Acting as a communication link between the external auditors and the board of directors. Between the external auditors and the board of directors. Acting as a communication link between the external auditors and the board of directors. Number next. Reviewing other internal reports. Reviewing other internal reports. Reviewing other internal reports, such as interim financial statements. Such as interim financial statements. Such as interim financial statements and management accounts. Reviewing other internal reports, such as interim financial statements and management accounts on behalf of the board. 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 All right. Advantages of audit committee. Advantages of audit committee. Advantages of audit committee. Advantages of audit committee. Number one, the existence of such a committee. The existence of such a committee may lead to increase. The existence of such a committee may lead to increase in confidence. May lead to increase in confidence. May lead to increase in confidence by users of financial statements. May lead to increase in confidence by users of financial statements, as well as credibility. Confidence by users of financial statements, as well as credibility. As well as credibility. All right, number two. Enhancement of external auditors' independence. Enhancement of external auditors' independence. enhancement of external auditors' independence as well as professionalism. Enhancement of external auditors' independence as well as professionalism. As well as professionalism. Number 30, provision of expert advice. Provision of expert advice. Provision of expert advice on various areas. Provision of expert advice on various areas, such as the improvement of accounting, such as the improvement of accounting and internal control systems. 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 Number next. Enhancement of internal auditors' independence. 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 Number next. Convenient avenue for internal auditors. Convenient avenue for internal auditors. Convenient avenue for internal auditors to channel their problems and challenges. Convenient avenue for internal auditors to channel their problems and challenges. Convenient avenue for internal auditors to channel their problems and challenges. Next. Improvement of communication links. Improvement of communication links. Improvement of communication links between the external auditor and the board. Improvement of communication links between the external auditor and the board. Between the external auditor and the board. So if you check properly, you realize most of these advantages can also be discussed as duties. Yeah, they can be discussed as duties as well. So if the examiner asks you about the importance of an audit committee, these advantages and the duties will comprise the importance, because the importance is as a result of the roles that they play. The roles that they play. All right, disadvantages of audit committee. 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 Number one, expensive in terms of resources. Expensive in terms of resources. Expensive in terms of resources. Number two, may create an impression of a parallel board. May create an impression of a parallel board. May create an impression of a parallel board alongside the main one. Parallel board alongside the main one. Parallel board alongside the main one, thereby creating conflict. Thereby creating conflict. Thereby creating conflict. Thereby creating conflicts? That's the question we were testing in leadership and management. Is it trust fitting at one? Question number one, the 40 marks question. The last part we were asking. Why such a structure? Why such a structure will bring some conflicts? Why such a structure will bring some conflicts? It's because they offer expertise, but the right guys are not obliged to follow the staff thinking. Other times, these guys will only go to these experts when need be. So they feel like that they are only consulted when the right are in crisis. Again, these may not have sufficient resources because they are not they are not under the chain of command. So they may not be well resourced. Again, the young guys would like to receive credit when job is well done, even when it is as a result of the input such conflicts. Those are the answers to that question. They very much apply here, that conflict may arise as a result. Next, there may be lack of availability. There may be lack of availability of directors. There may be lack of availability of directors. There may be lack of availability of directors. With technical capacity, there may be lack of availability of directors. With technical capacity to perform their functions, lack of availability of directors. With technical capacity to perform their functions. With technical capacity to perform their functions. Number 4, the needs may be engaged elsewhere. The needs, non-executive directors. The needs may be engaged elsewhere. The needs may be engaged elsewhere. May be overburdened. May be overburdened with responsibilities. Or may be overburdened with responsibilities. May be overburdened with responsibilities, i.e., other directorships elsewhere. Other directorships elsewhere. Other directorships elsewhere. Other directorships elsewhere. Haya, nimekutumia swali kwa group. It's not the only question, but now this one tests everything. Na ndio ile swali mrefu kabisa ya audit committee. Ndio ile swali mrefu kabisa ya audit committee, because it was worth 20 marks. It was worth 20 marks. It was worth 20 marks. All right, I read for you. You are the internal audit manager. You are the internal audit manager of Faida Investments Limited, a large company dealing in real estate and equity investment. The company has 4 executive directors and 7 non-executive directors. And 7 non-executive directors. That ratio is okay. At least the watchdogs are more than the executive directors. Full stop. The chairman of the board of directors of the company is keen. You're saying the chairman of the board of directors of the company is keen to establish an audit committee in order to enhance corporate governance in the management of the company. The chairman has requested that, or else the chairman has requested the managing director of the company to prepare a report on the audit committee for presentation to the board of directors in the next meeting. Required. Prepare a report to the managing director, which should contain the following details. A, the objectives of an audit committee and the recommended composition of the audit committee of the company. 5 marks. The functions of an audit committee, 6 marks. The advantages and potential pitfalls of an audit committee. The advantages and potential pitfalls of an audit committee, 6 marks. The working relationship between an audit committee and the external auditor of a company, 3 marks. On your story. Yes. So you're supposed to have it this way. You need to indicate to who. You are writing this letter to a report to the managing director. A report to the managing director. You have to indicate from who. You are the internal audit manager. So this is internal audit manager. Internal audit manager. Then, of course, we have dates. Today is on 13th March 2024. Audit committee. Audit committee. Then hiyo story yote tumeandika audit committee uiandike. Because that's what they're asking. That's what they're asking. The working relationship is clear between the audit committee and external auditor. I explained that that audit committee is involved in the appointment of external auditor. We have even indicated that it's a communication channel between external auditors and the management. We have even indicated that the audit committee will receive the audited accounts before they are signed by the directors. So you see that the audit committee and external auditors operate hand in hand. They operate hand in hand for the interest of shareholders and other stakeholders, for the interest of the shareholders. And so hii unajibigi hivi. Ukishaandika hivi, then hapa unaandika A. So that you answer A. The objectives of an audit committee and recommended composition. Share the recommended composition, minimum of 3. They must possess those qualifications. They should be non-executive directors. Yes, that's what you write. Remember, Kasneboro says don't write outside this margin. So that's why I'm doing A inside here. Then you skip a line, you do D. Functions of an audit committee. You skip a line, you do C. So you can do C, Roman number 1, advantages of an audit committee. Roman number 2, pitfalls. Pitfalls of an audit committee. Then you do D, the relationship between audit committee and the X. That way you earn yourself 20 marks with ease. You earn yourself 20 marks. 20 marks. Yes, they may crash, but objectives, you should do the duties, because objectives are the reasons why we need the objectives of an audit committee. Or why are they put in place? What they are expected. So you put the duties of an audit committee. But you realize I've indicated that the duties and advantages, they are crashing. Yeah. But you see now, you have to be keen, because there is a question asking on functions. There is a question asking on advantages. So we cannot put all the advantages under the functions, because again, we will miss out on some of them. The functions are the duties, and they are the objectives. Functions, objectives, duties. Yes. They are the same. They are the same. Yes. But again, if you're not asking for advantages, they're only asking for functions. Even these advantages will apply in the functions, in the objectives, in the importances. So it's advantages. Yes, advantages. Because if you look at them, they really look like functions. Like number 2, enhancement of external auditors' independence. That's other time we ask for role. Yeah, you get this right. Role of audit committee. See, there are those purposes, the functions. They are the duties. If they ask about the roles, they are the duties. So you can say advantage number 2, enhancement of external auditors' dependence. That's a role. You see, provision of expert advice. That's a duty. That's a role. But you see, we are looking at it as an advantage. So they are clashing that man. So it's only being keen. If they ask for both functions and advantages, make sure you don't exhaust them under the functions, duties, or roles, because you still need to list down advantages. Yes. Importance are the importance could be the objectives, they are the same. The advantages are the importances, and some of the objectives here will still fall under importances. Yes. So they have the tendency of saying it's a new company which wishes to put in place an audit committee. Kuna swali iko tu kwa script I can't recall where there's a new company which wishes to do an audit committee. Is it recommended? Then what are they asking? The advantages, the importances. Yes. Yeah, that's what I've just explained here. That audit committee are actively involved in appointment of external auditors. Then external auditors, or the audit committee acts as a communication channel between external auditors and the management. Plus, audit committee will review the audited financial statements before they are signed by the directors. That's what they have said. So that's their relationship, enhancing professionalism, enhancing their independence, communication channel, reviewing the audited accounts before they are signed by the management. That's what you put there. That's what you put. Internal. Exactly. With regard to the, so you can also be asked the role of audit committee with regard to the internal auditors. They remain the same, enhancing their independence, enhancing their professionalism. Communication channel is the avenue that they communicate their grievances, their issues, the management. Yeah. Inajirudiaga sana hiyo. Yeah, Maureen is coming up with a very point here. Does that mean we will have to word them differently, although they are the same? Yes. Yes, because the thing is, the instructions are answer all the questions. So answer the question on duties, answer the question on advantages. Answer the question on advantages. Hiyo ni sawa sawa. That's how we wind up on audit committee. Let's look at ISA 610, which yes. It looking like this will not sign. So, memos are not signed. The much they do is to stamp. Yes, it's a memo. The way it is a memo. To who, from who, date. So it will not be signed. Memos are not signed, if I'm correct. Yes, they're not signed. They're not signed. Are they signed? Are they signed? Yes. If it's a report, it has to be very, 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 very like what we did last time. You need to do your address. A report requires that you do your address here. You do dates. You do addressee. Yeah, then you salutation. Then audit committee. Audit committee. Then you answer the way we've done. Let me see. I think I overread it. Yeah, prepare a report to the managing director, which should consist of the following details. So a report has to be a bit lengthy. So addressee, you just generate any. Na tuko na jina ya kampuni. We have the name of the company. So it's only the postal address that you are the internal audit of Faida Investment Limited. Yeah, so it's management of Faida. So you do your address, like the way we did. There's a report we prepared the other day. Which was it? For management letter. All right. So you do your addresses, the addressee, you have the name of the company, BSRs, stroke madams, the reference audit committee, then you proceed to write. It's good to, although myself, when I'm marking, I will not deny you marks. You have given me what I'm looking for. It's somebody who is asking. Yeah. Whether if we did without a report format, we do it like a memo. Are we likely to lose marks? It varies. Yes, somebody may deny you like 2 marks. You know, there are some guys who mark guided by the marking scheme. They know nothing much about what they're marking. They're guided by mark. Anything outside the marking scheme is wrong. Yes, but if it's me who's marking, you have given there, it's very clear. It's from who, the date, the read. I don't have any reason to deny somebody some mark. No. So it's either this is a memo, this is a memo. That's why I didn't sign it. Memos are not signed. Oh, they're signed. So down here we indicate yes, physically. Or just what do you do? Yes. They do their signatures. Yes, stamp I know. What I was not sure is about the signing. Yes, somebody should try to assist us. Yes? I was looking at the contents. The contents concerning the questions asked. Yes, that there is clarity it's from who to who, and it concerns what. Yes, that's what that's how I made that conclusion. Otherwise, I don't see any major problem with it. But to be safe, when they ask for a report, let's do a full report. Let's have our address, the date, the addressee, the salutation, the reference. Then we proceed like the way we did management letter. What will change are the contents. Otherwise, the addressee, and the signing out down there will be that was a good engagement. I've just Googled, are memos signed? Signature. Do not sign a memo at the end of the message. I don't know why. At most, leave one line space and then restate initials and closures. There are enclosures, first write ENCL, enclosures. Leave one line of space, then write the title of the enclosures. Yes, all along I've been saying they are not signed. Yes, but you see, I was not even pretty sure, but that's what I know about them. It's a good engagement. At least we've checked through Google, Mr. Google. We have checked through Mr. Google. Yeah, I remember we see some memos with something of that nature. NCL, you seen them down there? After the memo, they do ENCL. What is it? I've just seen an enclosure, something. the attachment, eh? Why? Okay. All right. We are still doing corporate governance. It's a 610 audit committee. Sorry, internal audit. We already defined it and said it's an independent appraisal function. Biggest is ICS. Kazi ya internal auditor ni kufanya kazi ya internal control system. So this aspect we discuss about expectations gap. Expectations gap with regard to external auditors, where we say that people out there think that auditors report to management, but they report these shareholders. People out there think that qualified report is a good report and qualified is a bad report, while the opposite is true. People out there think that auditors are there to look for errors and frauds, whereas that's just an incidental objective. That explains expectations gap with regard to external audit. Now, with regard to internal audit, employees of the client think that internal auditors are witch hunters. Yes, because these are guys who are looking whether you have committed any frauds and such. That's another expectations gap, a misconception, because it's a 610. Institute of Internal Auditors is very clear and categorical that the responsibility or the duties bestowed to the internal audit function is to appraise internal control system as a service to the management. This is to appraise ICS as a service to the organization, as a service to the management. Any other function they perform is just a delegated function. Internal auditors perform a lot of delegated functions. If we had an internal auditor here at KCE, the internal auditor will check how fees is being receipted. They will check how timetabling is being done. They will check how classes are being administered. Yeah, what else will they check? The security of the students, of staff, of teaching and non-teaching staff. That's what we'll be doing. If they are engaged by a supermarket, for instance, they will be checking on how procurement is done, purchases are done, pricing is done, arranging of goods in the supermarket, in the shelves, do we call it what? As point of sale, POS, how it is functioning, the packaging to the customers, that's what we'll be checking. If they're engaged in a hotel, there's a question number 2 in the past papers that auditors are engaged to internal auditors or Muro, we call it Muro hotels. You'll find it in a past paper that I'll send later. Muro hotels have engaged internal auditors. Then the examiner is asking you, you indicate the duties, the roles, the functions that internal auditors would play with regard to Muro hotels. And they're telling you they have a restaurant and they have accommodation. So basically they're telling you that the auditors will be checking how food items are bought, how food items are stored, how cooking happens, the safety of customers. They check about the pricing of food items. They will check the accommodation, how rooms are allocated to guests, how the guests are invoiced, how they make the payments. So internal auditors perform lots of delegated functions, including and not limited to, they would perform some ad hoc assignments, including forensic audit. They would be involved in risk assessment. There are some organizations without a risk assessment or risk committee. So the element of risk management is entrusted to internal auditors. They may be entrusted to perform functional audits. Functional audits. Functional audit is when you are auditing human resource department, finance department, sales department. Internal auditors may be entrusted to do this. They may also be performing what we call partial audits. Partial audits. Partial audits include compliance audit, value for money audit, balance sheet audit, management audit, and procedural audit. Those are 5 types of audits that we refer to them as partial audit because they're not complete audits. They don't meet the full definition of auditing because auditing is an independent examination of books of accounts, records, and vouchers. But for this audit, if it's procedural audit, they are reviewing the procedures. If it's value for money audit, they are reporting about the 3 E's: economy, efficiency, effectiveness. If it's balance sheet audit, just the 3 components of the B sheet: assets, liabilities, and capital. If they are performing a compliance audit, they are looking at the adherence of the entity to the relevant rules and regulations. So they even, on matters ICS, they will design ICS, they will ensure its proper implementation, they will even train other departments in the organization on matters ICS. They would even check on how ICS is responding to errors, fraud, irregularities. Remember the 5 objectives we highlighted on why we require ICS. This is under ISA number 315. We said we require ICS, number 1, to ensure smooth and efficient running of the business, to safeguard the assets, to prevent, detect, correct errors, fraud, irregularities, to ensure adherence to management policies, and number 5, to ensure timely and accurate preparation of the financial statements. So the internal auditors will be checking how these internal control systems are responding to the objectives that they are intended to achieve, to the objectives that they are intended to achieve. So as per the definition, we'll be saying that an internal audit is an independent appraisal function. Then indicate them achieving independence is next to impossible because we know they are appointed by the management, they report to this management, and it's this management who influences on their scope of work. So to enhance their independence, we put in place an audit committee. To enhance their independence, we make them report to the audit committee or non-executive directors. To enhance their independence, we ensure that just like their external counterparts, they have unrestricted access to the books of accounts, records, and vouchers. And again, they are able to influence on their scope of work. Management should not be the one dictating on what internal auditors are expected to do. This way, we'll be trying to enhance their independence because we appreciate that it is an uphill task for internal auditors to be independent. Then to appraise ICS as a service to the organization, I've just explained, designing them, implementing them, appraising them, conducting trainings on ICSs to all the departments. Plus, I've indicated that that's not all. They perform so many other delegated functions. Internal auditors are very helpful to external auditors. Where as an external auditor, you find that internal auditors are independent. Internal auditors are qualified. Internal auditors are certified, maybe by IIA, or they are even members of ISPAC. Their membership is up to date. You find that they are not starved of resources, commercial resources za kutosha. You find that internal control system is strong. Check this. Theirs is to appraise ICS. So if you find that ICS is weak, then it means they're not able to execute their primary mandate. But if you find that the client has got very strong internal control system, this could be an indicator that internal audit is effective. So if as an internal auditor, you are okay with this, you are likely to place reliance on the work of internal auditor. Which are the areas of assistance or of what importance or assistance will be internal auditors to external auditor? Kuna kazi external auditor hatafanya kama imeshafanywa na internal auditors who are independent, qualified, certified, strong ICS, and so on. They will not carry out stock take. They will place reliance on the work of internal auditor. They will not even do head counting. They will not even prepare some schedules. They may rely on schedules prepared by the internal auditors. They may even check this. They may not even perform some background research. Internal audit is enough. They may not even perform risk assessment. They may place reliance on the work of internal audit. So this way, external auditors end up spending rest time in audit, because much of what they are doing, they are placing reliance on the work of internal auditor. So they spend rest time, they enhance efficiency, and they make informed conclusions. Kwa sababu gani? Remember, internal auditor is permanently dominant in the client's premises. They are report kazi kila siku, like any other employee. So even on technical matters, like internal accounting standard or international accounting standard number 2 requires us to create provisions for slow-moving stock items. Internal auditor will know. Sababu wewe utakuta kuna items opening stock ziko 7, closing stock ziko 3. You will not know, not unless you carry out some very substantive tests, that you may assume that a lot of purchases happened and a lot of sales happened until we have closing stock as 3 items. Only to realize later that no other purchases were done. This is an element of slow-moving stock items, that they only sold 4 components within that financial year. Internal auditors are in a position to shed light on such technical matters because they are dominantly present in the client's premises. So when you talk of limitations of internal audit kuna limitations kadhaa, na nishakuelezea moja kwamba kuachieve independence, hiyo ni story. I've carried out several corporate trainings on internal auditors of universities, internal auditors of government or parastatals. But what they always say, they are never independent. Sometimes even political class influences on how internal auditors report. Yeah. So they have limitations of independence. They have limitation that actually most of the internal auditors in Kenya, they are not members of IIA. Others do not even know that we have IIA. And you know, for you to become an internal auditor, you must not be a CPK. It's not a requirement that you be a CPK to be an internal auditor. Although IIA recommends that internal auditors be as qualified as their external counterparts. But as long as you have skills and you are competent, you can be employed as an internal auditor. Don't you have friends who are not CPK and they're internal auditors? Hauna marafiki? Mimi niko na wao kadhaa. Actually mwenye nakumbukaga sana ni rafiki yangu alikuwa internal auditor hapa wa GPO. Nitoka GPO? Yeah, post. The guy who was the internal auditor there, saizi ni internal auditor kwa county, either Kisii or Migori. Ni internal auditor huko. Yes, alikuwa internal auditor GPO. Na saa hiyo alikuwa amecombine section 5 and 6 na bado alikuwa anafanya masters UN at the same time. Yes. And he passed all the papers. Yes. So na yeye asubuhi alikuwa anatafuta basi yenye haina makerere, yenye iko na right. Ndio anasoma akikuja morning class. Yes. Alafu anatafuta watu wa day class. Anatafuta majamaa kadhaa wenye wanafanya discussion na yeye. Sababu, you know, sometimes day class we tend to do more illustrations in calculation subjects more than evening class because we can do lots of makeups. Hata register zangu zikizunguka unaweza ona day class tunasomaga register inajaa na inaanza pale chini tena, but yetu haifikagi mwisho because we only meet there 2 times per week. So akatengeneza group kama hiyo. He maneuvered and passed all the papers and now he got job with at county level. So internal auditor si lazima uwe na CPK. Si lazima. I know several of them. Yes. So sasa hiyo peke yake inakuwa kwamba we are not regulated. Not like external auditors, we know they are members of ISPAC. So hakuna regulations, kumaanisha kwamba there is no standardized way, standardized tasks You see, I've indicated it's like now internal auditors do everything. Because they do that. Unlike external auditors, where we are guided by ISAs on how to carry out the audit. So this one is not standardized, not regulated or not supervised. It's not supervised. Then number 4, kuna hiyo tumesema expectations gap. As those are the main limitations of an internal audit. Achieving independence next to impossible. If they are not supervised, no standardized way of doing it, then there is that element of expectations gap. There is that element of expectations gap. Some organizations do not have an internal audit. They do what we call outsourcing. Outsourcing. What's outsourcing? If you're asked in an exam, what is outsourcing of internal audit? I know we know. Vile tu Kiingereza tunajaribu kuipanga. I know we know what is outsourcing. Yeah. This is where an entity will not have an in-house department, rather engage an auditor when need arises. So that's what happens. Yeah, you don't have an IT person, an in-house IT person. You only look for one and engage them on need basis. That's outsourcing. What are the advantages of outsourcing internal audit? Yes, experts. So you go for the best. You go for the best. Another advantage, it's cheaper in the short run. In the short run, it's cheaper because they're not in our payroll. We only pay them when we engage them. But in the long run, ile rent umelipa Nairobi ungekuwa umejenga kwako. Yes, it's cheaper. Rent is cheaper because we pay very little. But in the long run, that money, it's out. That's how we look at it. Yes. Another maybe advantage of outsourcing. They are likely to be dependent. Because you see, for this case, they are employees of the client. So achieving independence may be next to impossible. But when we take them from outside, even the client staff are likely to be more vigilant now that an independent person, an impartial person has been engaged to carry out internal audit. What else may be another advantage? Yes? Say? Resources. How do we explain that about resources?
Yeah, maybe
Yeah, resources maybe you look at in terms of it's cheaper for the client because it will not be the client will not be involved in recruitment process, training. Do you know entities train to impact their staff with skills that they may lack, so that's to enhance efficiency. But now that's not you. The element of staff turnover does not affect you as a client. It affects the other person, the internal audit, the auditing firm. So that's how we say that we are not recruiting, there's no recruitment process, and we're not affected by the cost associated with turnover. Maybe we look at that, so maybe transfer, focus on focus on core areas of a company. We're able to focus on core business. It's true, it's always an advantage. We're able to concentrate on core business. So those other businesses which are not core, we engage other. We are giving another advantage. Transfer of risk. It's, It's them who will bear in case of any issue arising. Only that the internal auditor's report is for internal consumption. Yes, you're discussing with regards to internal. With regards to internal, now I've gotten your reasoning. Outside internal audit, we are transferring risk to those persons that we engage. It's very practical. But for internal auditors, it may not feature because no external person consumes the output of an internal audit exercise. It's purely for management. It's purely for management. All right. Disadvantage is expensive. Another disadvantage, we are exposed to secrets. Our secrets are prone to, yes, to be accessed by so many people. We are engaging this one today, tomorrow the other one. So our secrets are exposed. Again, it may be expensive in what terms? I should not talk of expensive because that's disadvantage number one. That they may spend a lot of time in auditing because every other time they want to perform background research, they cannot audit us before they know us. But if we had an in-house, they perform background research once, they understand us, that's it. But now every other time we engage any auditor, they may end up spending a lot of time, plus they are not well conversant. You know, being versed with the client's operations puts you in a better position as an auditor to report about them. And that's why ISA 310 comes before audit planning. It comes before audit planning. Actually, even before we accept appointment, we talk of reference. We are performing references to try to obtain clients' information. Clients' information. All right, there's another time we talk of co-sourcing. Co-sourcing. What is co-sourcing? We've talked of outsourcing. What about co-sourcing? Co-parenting. Yes. Co-sourcing. Co-sourcing is when you have your internal audit department, but you go ahead to outsource another one for them to work together. Come up peer review. Yes, that somebody else is coming to check what is being done internally. Yes, it's like peer review, because peer review is somebody else coming to review what you've done. Eh? Yes, now that's what happens. Its primary reason, its primary purpose is to enhance independence of internal auditors. That's why we bring on board an impartial person, an outside person, so they work together with our in-house audit department. So co-sourcing, we outsource when we still have our internal audit department for them to work together to enhance the internal auditors' independence, and of course, to meet strict deadlines. We are able to meet strict deadlines because now the more you engage, the more people engage, the faster the task will be executed. The faster the task will be executed. No. Oh, internal check. Eh? Internal check ni kama ile ya you've ever done what we call team viewer? Have you ever used team viewer? You've used team viewer. How does it work? That you are very far, but you're able to see what I'm doing. Yes. TeamViewer is very good. You've used it? You've used it? TeamViewer, actually, when you are facing issues in your Excel or any accounting package, and somebody else elsewhere knows how to go about it, you connect through TeamViewer. So they are able to see your desktop, your screen, from a remote area. Now they can tell you, click. They can even click for you. You can use a mouse to click for you and tell you, I'm telling you to click here, here, and here. So internal check is where work of one person is checked simultaneously by another person. It's real time. It's real time. Or maybe like you count some coins I'm giving you, now you verify. So internal check, it involves real-time review of the work of the other person. You need to check TeamViewer. Check TeamViewer. Yes? Co-sourcing. Co-sourcing is a bit different. It's a bit different. Yeah. Because see what we're saying about co-sourcing. You outsource. You have an internal audit because you said, why are we outsourcing? We want to concentrate on our core activities, primary activities. So we only outsource when we need them. But here, we have our internal audit department. But when it comes to carrying out internal audit exercise, we outsource. so that they can come work together. They work together. We want them to work together so as to enhance the independence of this internal audit function. So they are not purely checking the work done by internal audit. They are working together. They are working together. The essence is to work together to enhance the internal audit function independence. So internal check, kazi ya mtu inaangaliwa na mwingine. Peer review, after you have done your work, somebody else checks it through. It's one way of mitigating threats, mitigating independence threats. Remember there somewhere we said, we discussed mitigating factors in two categories. Yeah, we talked of mitigating factors that have been put in place by the accountancy profession and mitigating factors that have been put in place by an audit firm. Those that have been put in place by audit firm, we discussed firm-wide safeguards and engagement-specific safeguards. Under engagement-specific safeguards, we said, unaona hizo mi kwa kitabu yangu ziko east side up. So I want you to be able to make reference to the book. We said, engage another auditing firm to perform or reperform. So that reperforming is what we call review. Because you've already done it, then somebody else comes to check it through. But this one, co-sourcing, they are not coming to check the work of the internal auditor. They are coming to work together as one entity. Excellent engagement. We will not be able to write all that, but for purposes of flow of our notes, let's have definition. Let's have definition as I touch my phone to share some notes with you. The touch here. To share some few notes with you. So say, it is an independent appraisal function. It is an independent appraisal function. It is an independent appraisal function established by management. Independent appraisal function established by management, established by management of an entity, established by management of an entity, established by management of an entity, to review the internal control systems, to review the internal control systems, to review the internal control systems is a service to the organization, is a service to the organization, is a service to the organization, is a service to the organization. First up, another paragraph. The Institute of Internal Auditors, the Institute of Internal Auditors, the Institute of Internal Auditors, into brackets, IIA, into brackets, IIA, into brackets, IIA. I got some interest with the IIA last year, December. I had some trainees from Eritrea, Ministry of Agriculture. I trained them for 2 weeks. Week 1, I trained them in internal audit. Week 2, I trained them in forensic audit. Then one of the participants, the chief internal auditor, remained in Kenya for other 2 weeks because he had booked an exam with IIA to sit those exams here in Kenya. So we need to, and he booked online. Maybe there's an untapped elements that we need to know. We need to get information about this. Yeah, we could be having an upper hand when we attend internal auditors interview somewhere and you have certification from IIA. That's if you wish to venture in internal audit elements. Good. So it's there. It's there. It's there and very functional. So the Institute of Internal Auditors, IIA, defines an internal audit. Defines an internal audit as a department that independently determines evaluates, reviews, and reports. We are saying determines, evaluates, reviews, and reports on the adequacy, design, and operational effectiveness. Determines, evaluates, reviews, and reports on the adequacy, design, and operational effectiveness of internal control systems, design and operational effectiveness of internal control systems is a contribution to proper economic, efficient, and effective use of resources. Economic, efficient, and effective use of resources. Proper, economic, efficient, and effective use of resources. Okay, so if you check the notes that I've sent, sasa tena ni zote kuanzia. Kwanza kuna moja inaitwa Aaa Corporate Governance, Audit Committee and Internal Audit. Hiyo imebeba story kama gani? Ile yote yenye tumeandika ya Audit Committee, then Internal Auditor ile tumeelezea pale, everything there. Areas of assistance, factors to consider before pressing reliance and limitations of internal audit that I've explained is there. Then I've explained about outsourcing. Outsourcing is in a separate scanned notes. Outsourcing of internal auditor, factors to consider when outsourcing: professional competence and qualifications, technical skills, cost to be charged, independence and objectivity, risks involved, reputation of the service provider. All that I've highlighted advantages of outsourcing and disadvantages of outsourcing. Then there is this other on internal audit. These are a bit lengthy because this is what we lecture at intermediate level. Again, defining internal audit, the elements. We have the functions of internal auditors, extent to which external auditors may delegate to the internal auditors. It's their factors to consider when pressing reliance on the work of it's just repetition there. Then comparing internal auditor with external audit. All those notes are important. I believe what's only missing in my handout is co-sourcing. Co-sourcing. So make sure you don't forget what is co-sourcing. Co-sourcing. When we are outsourcing, yet we have an internal audit function for them to work together to enhance independence and professionalism. So co-sourcing, get it right. We have an internal audit department, but we go ahead to outsource for them to work together as one entity, Sawa. We will stop at that. but I know there are several areas that you require my intervention. There are some areas that you require my assistance. But do you know, after we cover environmental audit, hata Kasnebu wakakuja kama uko serious utapita hiyo mtihani. After tumesoma environmental audit, that's another sensitive area that's what we'll cover on Saturday. We'll cover environmental audit, social reporting and environmental audit. That's what we'll cover. Others will be shocked to check through the syllabus and realize it's like they're done with everything. Let's do that analysis on Saturday. Let's do that analysis on Saturday. Let me tell you how I will assist you, how we will assist each other to understand group audit, because ilifanywa through video. Nakuja na maswali. Na si maswali ya kitambo kuanzia la sitting, tuangalie ni group audit maswali gani imeletwa. Ndio nikusaidie kushika audit procedures za group audit. Na nikusaidie other aspects of risks when auditing group. Bado hii yenye ililetwa on Saturday, is a number 810 PFI. I'll assist you through questions. So najuaga ni gani imeletwa kwa video and I don't consider it done. Najuaga tu ni kunisaidia kushikilia saide siyuko. But these two, they are very sensitive. I should even say very, very in capital letters, in bold and underlined. These two topics, they are very sensitive. Of course, together we discussed related parties, because this is another very sensitive area, but at least this one we discussed together. These two, be sure I'm not considering them covered until we discuss here in class. And this is what we'll follow immediately. We are through with environmental audit. So you should not be worried. You should not be worried. Let's see the grace. Now may the grace for our Lord Jesus Christ and the love of God and the fellowship of the Holy Spirit with us now and forevermore. Amen. So blessed evening, blessed evening. Be safe, be safe. Oh, bado. Yes. Auditors report bado hatujafanya.